Hello, everybody. Welcome back to Mint. My name is Dean. Hope you're having a good week. What's today's date? I don't even know. February 3rd, 2021. Wow, it's Wednesday. Man, oh man. Can't believe it's February already. 2021 is going to be over in a blink of a friggin' eye. But I just can't wait for the summer. Hope you're all well, having the time. Let's dive into today's episode, shall we? Keeping with tradition the past couple episodes, let's do a deep dive into another financial slash government related department. It's called the Consumer Financial Protection Bureau, which, if anyone knows me personally, again, I've mentioned it on previous episodes. I work in risk and I do a lot that is regulated by the CFPB. So, hey, let's do a deep dive. It should be interesting. So, for those who do not know, the Consumer Financial Protection Bureau, it's an agency within the U.S. government. They're responsible for the protection in the financial sector for consumers, kind of like their guardian angel, to put it in simple terms. The CFPB jurisdiction includes banks, credit unions, securities firms, payday lenders, mortgage servicing operations, foreclosure relief services, debt collectors, and other financial companies operating in the U.S. Since it was founded, the CFPB has engaged the 21st century by using technology tools to monitor how financial entities use social media and algorithms to target consumers. So, in advance its core consumer finance mission through enforcement and rulemaking. The CFPB has engaged with the data economy in a number of ways. The CFPB's creation was authorized by the Dodd-Frank Wall Street Reform and Consumer Protections Act, whose passages back in 2010 was a legislative response to the financial crisis of 07-08 and, of course, the subsequent Great Recession. The CFPB's status as an independent agency has been subject to many challenges in the courts. In June 2020, for example, the U.S. Supreme Court found the single director structure removable only with cause unconstitutional, but allowed the agency to remain in operation. So, before we dive into the role and the innards of this government agency, I do want to say that during the Trump years, we saw a lot of rollbacks on past CFPB rules and regulations towards all those entities that we mentioned above. And now with the Biden administration, which is supposed to be one of the most progressive administrations to date, we're most likely going to see some more oversight and possibly even some executive actions towards the financial sector, which the CFPB will most probably have a part in if we do see it. So stay tuned to the Biden administration. So the role of the CFPB, according to former director Richard Cordry, the Bureau's priorities are mortgages, credit cards, and student loans. The CFPB CF fucking PB. God, that's going to be fun to say. Repeat it over and over. So the CFPB qualifies as a large independent agency that was designed to consolidate its employees and responsibilities from a number of other federal, regulatory bodies, including the Federal Reserve, the FTC, the Federal Deposit Insurance Corporation, National Credit Union Administration. What else we got? I believe the Department of Housing and Urban Development. So the Bureau sits within the division of the Federal Reserve of the U.S., so the United States Federal Reserve. It had an interim affiliation with the U.S. Treasury, but its home, sweet home, is the U.S. Federal Reserve Bank. The Consumer Financial Protection Bureau's writes and enforces rules for financial institutions. They also examine banks, both non-bank financial institutions and banking institutions, monitor and reports on the markets, as well as collect and track consumer complaints. The CFPB opened its website back in 2011 to accept suggestions from consumers via YouTube, Twitter, and its own government website. According to the U.S. Treasury Department, the Bureau is tasked with the responsibility to promote fairness and transparency for mortgage, credit cards, and other consumer financial products and services. According to its own website, the CFPB's central mission is to make markets for consumer financial products and services work for Americans, whether they are applying for a mortgage, choosing among credit cards, or using any number of other consumer, financial products. And by the way, most of complaints in these certain databases, of course, with secret information redacted, most of this information is publicly available on the federal government database. So go check it out yourself. So they also have this thing called the 10 billion asset benchmark. So once a financial institution acquires 10 billion in assets, it falls under the guidance rules and regulations under the CFPB. The bank will be known as the CFPB regulated bank. The CFPB will conduct examinations of the banks for compliance with local, state, and federal regulatory laws and whatever. So other auditors, government agencies that audit, the OCC, the Federal Trade Commission, there's a bunch of different ones, but the CFPB ones, something hits 10 billion, Consumer Financial Protection Bureau kicks in. And keep in mind, even though if it's not regulated by the CFPB, a lot of banks, if they're under that benchmark, will still operate under CFPB guidelines because it will most likely be in compliance with the OCC and other regulating bodies and conform to state and federal laws. So it's always good to know about it. So the history of the agency. So in July 2010, Congress passed the Dodd-Frank Wall Street Reform Consumer Protection Act during the session of Congress, where it was their job to respond to the Great Recession and financial crisis. The agency was originally proposed in '07 by then, she's a legend, get ready, she was she was a Harvard Law School professor. You may know her. She's Elizabeth Warren. She's now the great senior senator from the Commonwealth of Massachusetts. So Elizabeth proposed the CFPB and was supported by a group called the Americans for Financial Reform, a newly created umbrella organization of some 200 some odd consumer labor, civil rights, and other activist organizations. And she had overwhelming support from, of course, the Democratic side, as well as most Main Street Americans. So she's a legend. What can I say? She's one of the best things that happened to U.S. government. But so she proposed the CFPB on September 17, 2010. President Obama announced the appointment of Warren as assistant to the president and special advisor to the Secretary of the Treasury on the Consumer Financial Protection Bureau to set up the agency. Due to the new way the legislation creating the Bureau was written, until the first director was in place, the agency was not able to write new rules or supervise financial institutions other than banks. So on July 21st, 2011, Senator Richard Shelby wrote a op-ed for the Wall Street Journal affirming his continued opposition to a centralized structure, noting that both the Securities Exchange Commission and the Federal Deposits Insurance (FDIC) had executive boards that the CFPB should be no different. He noted lessons learned from experience with Fannie Mae and Freddie Mac as support for his argument. Politico interpreted Shelby's statement as saying that Corddry's nomination was dead on arrival, who Corddry was the first director. Republican threats of a filibuster to block the nomination in December 2011 led to, a Senate battle. So here we go. I told you I was going to stumble. This Consumer fucking Protection Bureau, the Consumer Financial Protection Bureau formally began operation on July 21st, 2011. Shortly after President Obama announced that Warren would be passed over as director in favor of Richard Corddry, who, prior to the nomination, had been hired as chief of the enforcement for the agency. Elizabeth Warren, who proposed and established the CFPB, was removed from consideration as the Bureau's first formal director after the Obama administration became convinced Warren could not overcome strong Republican opposition. So, on July 17th, President Obama nominated former Ohio Attorney General and Ohio State Treasurer Richard Cordry to be the first director of the Consumer Financial Protection Bureau. There you go. However, Richard Cordry's nomination was immediately in jeopardy due to 44 Senate Repubs vowing to derail any nominee in order to encourage a decentralized structure of an organization. Senate Republicans had also shown a pattern of refusing to consider regulatory, agencies. Republicans don't really like financial oversight. I hate to break it to you. So, since the CFPB database was established back in 2011, more than 730,000 complaints have been published. CFPB supporters include Consumers Union claim that it is a vital tool that can help consumers make informed decisions. It's true, I believe that. The CFPB detractors argue that the CFPB database is a gotcha game in that there is already a database maintained by the FTC, although the information is not available to the public. It's all about transparency with the CFPB. They'll let you see it. They'll let you see it. On January 4th, 2012, President Barack Obama issued a recess appointment to install Cordry as director through end of 2013. This was a highly controversial move as the Senate was still holding pro forma sessions and the possibility existed that the appointment could be challenged in court. This type of appointment in recess was unanimously ruled unconstitutional in a case NLRB versus Noel Canning. So on July 16th, 2013, the Senate confirmed finally Cordry as the director in a 66-34 vote. Cordry resigned as director in late 2017 to run for governor of Ohio, where he lost with DeWine, Mike DeWine, the governor. Let's see. The Financial Choice Act, proposed by the House Financial Service Committee, Jeb Hansarding, to repeal the Dodd-Frank Wall Street Reform and CPA Act, passed the House on June 8th, 2017. Again, also in June 2017, the Senate was crafting its own reform bill. Testimony in the U.S. congressional hearings of 2017 have elicited concerns that the wholesale publication of consumer complaints are both misleading and injurious to the consumer markets. One rep from Georgia said, It is a purpose of the database just to name and shame companies," that representative went on to say, "or should they have a disclaimer on there that says it's a fact-free zone?" That's Barry Luter-Milk, Republican from Georgia. Or is this fake news? So, I mean, he obviously doesn't want oversight. He's going on and on and on about his distaste for, things to be viewable to the public. He's bitching and moaning. So let me skip over that. Mick Mulvaney, as acting director of the CFPB, removed all 25 members of the agency's advisory board on June 5th, 2018. See, I told you, once Trump took over, his campaign did damage. I mean, his administration did damage to the CFPB. There was a dispute over the acting director. So let's see. Director Cordry appointed Leandra English to the position of deputy director and announced that he would leave office at the close of business that day. Cordry indicated that that would make English the acting director after his resignation, of course, citing provisions of the Dodd-Frank Reform Act, providing that the deputy director at the CFPB become acting director in the absence or unavailability of the director. Later the same day, however, here we go, buckle up, President Donald Trump appointed the incumbent director of the Office Management and Budget, Mick Mulvaney, as acting director, citing the authority of the Federal Vacancies Reform Act of 1998. On November 25th, 2017, the Office of Legal Counsel released an opinion written by Assistant Attorney General Stephen Engel, asserting that the President Trump had the authority under that Federal Vacancies Act to designate an acting CFPB director. The Office of Legal Counsel memo maintained that both Vacancy Act and Dodd-Frank Act are available for filing of an acting basis as a vacancy that results from a resignation of a director, but that when the president designates an individual outside the ordinary order of succession, the president's designation necessarily controls. This position was also supported by the general counsel of the CFPB, Mary E. McLeod. So on November 26, 2017, English, represented by CFPB senior counsel, filed a lawsuit in the U.S. District Courts of D.C. seeking a temp restraining order and declaratory judgment to prevent Mick Mulvaney from becoming acting director. Mick was given access by unnamed individuals with the keys to the director's office on November 27th, the day after acting director English's lawsuit, and then ordered all CFPB employees to disregard any claims or assertions from English that she is the acting director. Pretty much Mick Mulvaney and Trump marched in, so this is our house, kicked her out, and let's see, a few months later, U.S. District Judge Tim Kelly, who had been appointed by Trump just a few months earlier, denied English's motion for a preliminary injunction and allowed Mulvaney to begin serving as the acting director. So it turned into an episode of One Life to Live during the Trump agency. They were kicking people out, trying to move in, trying to move out. The judges were getting involved. Sonny Corinthos even made an appearance. It was just, it's wild. So regulatory activities from its creation until 2017, the CFPB had curtailed abusive debt collection practices, reformed mortgage lending, publicized and investigated hundreds of thousands of complaints, from customers or financial institutions as well, and extracted nearly $12 billion for 29 million consumers in refunds and canceled debts. So again, like I mentioned in the very beginning, look at it as the guardian angel, and kind of the hall monitor for banks, kind of protecting you when you're going up against the big dog. For example, if you pay your bill on time, your credit card bill, right? You pay the balance, and all of a sudden you look the next day on the due date, and it's there, whatever, and the next day you see it post that it wasn't there, and you don't catch it at first because you made the payment, but then 30 days later, their system still thinks you didn't make the payment. It triggers your credit report, to be 30 days late, your score goes down. You know how that is. God forbid you're buying a house during that time, because then they'll start, why you have late marks on your credit? But even though it was the financial institution's fault, if the bank gives you issues, you just copy the CFPB on that. The CFPB then steps in and says, hey, what's going on? We need you to investigate it, or you must, stop reporting, negatively, which the Fair Credit Reporting Act also covers on that. But again, guardian angel. So for mortgages, regulatory implementation regarding mortgages is covered on the Bureau website. Topics provided for consumers include 2013 mortgage rule implementation, resources to help people comply with, CFPB regulation, quick reference guides, charts, supervision, and examination materials. So even you can see what the banks are being regulated for, what their exams will look like, what the auditors are going to sniff for. And, links, of course, for feedback. It also provides additional info that covers rural and underserved counties, HUD-approved housing counselors, and, of course, other information. So go check out the website. It really will give you a deep dive into all the, the lending and CFPB things. It's interesting. So retirement and insurance investments. So the CFPB is weighing whether it should take on a role in helping Americans manage retirement savings and regulate savings plans, particularly focus on investment scams that target the retired, and the elderly. That's one of the things they've been exploring and are interested in terms of what authority they have. Bureau Director Richard Corgi, was quoted of saying way back when. So some conservatives have been critical of this, potential role, with William Tucker of the American Media Institute asserting that the agency intends to control retirement savings and force people to buy federal debt. The AARP has encouraged the agency to take an active role, however, arguing that the Bureau will help protect elderly Americans from fraud that often targets senior citizens, ensuring that their investments are less likely to be stolen through securities fraud or malpractice. The main regulator of retirement and benefit plans established by employers in private industry is the U.S. Department of Labor, which enforces the main laws, the ERISA, COBRA, and HIPAA. Retirement plans include 401k, the simple 403bs and traditional defined benefit pensions, blah, 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 as well as many aspects of employer group health plans. The Affordable Care Act established marketplaces selling health plans directly to consumers, adopted, ERISA style regulatory model requiring all plans to have standardized documents such as, summary plan documentation, but the marketplace was regulated by the individual insurance commissioners of each state, not, one regulatory agency like the CFPB. So we don't have to go deep into that. Let's see, the public outreach, and according to the CFPB, has created a number of personal finance tools for consumers, including Ask the CFPB, which compiles plain language answers to personal finance questions. Paying for college, which estimates the cost of attending specific universities based on financial aid offers, cool things like that. So go ahead and check that out if you're young, looking at, what protections you have and what advice the CFPB has to offer. You never know. It may help you out. The CFPB has also attempted to help consumers understand virtual currencies such as Bitcoin. So if you need help with that, go look at the CFPB. They might be able to give you some specifics with the virtual currencies. Virtual currencies are confusing as hell. I mean, it's a virtual currency, virtual money is a type of unregulated digital currency which is issued and usually controlled by its developers and used and accepted among the members of a specific virtual community. So, for example, in 2014, the European Banking Authority defined virtual currency as a digital representation of value that is neither issued by a central bank or a public authority nor necessarily attached to a flat currency, but it is accepted by natural or legal persons as a mean of payment. So again, good luck regulating that. And the CFPB has advice on it. I don't know. It's according to them, they do. But let's see, we have an acting director right now, David. I can't pronounce his last name, but hey, Dave. I don't know if Biden did Biden put anybody up to replace this guy. I don't know. Well, we'll see. But that's the CFPB in a nutshell. We'll see if Joe Biden does anything to change it and strengthen it. We're getting hints through the grapevine that most likely brace for impact. Regulations are coming and audits are coming. So which is good. Which it's good to hold banks accountable. It's good to protect your consumers. Everybody should be striving to be in compliance, and oversight is just a name to the game. So again, Consumer Financial Protection Bureau. Go check out the website. It's very transparent. And if you don't know Elizabeth Warren, we went through it. She created it, so go check her out too. We may do, just reading this, learning, about a little bit about the Bitcoin. I should do a big little deep dive into virtual currency. That should be interesting. But anywho, just rambling now. Hope you're well. Friggin' freezing here still. Don't want to talk about it. In other news, I think just random just popped in my head. Wendy Williams, how you doing? She's having like a Lifetime movie or something coming out this weekend. I saw. I'm gonna have to check that out. I can't wait to see who plays her ankles in the movie. That should be interesting because woo. Until next time, stay well. Support your local businesses. We will see you next time on Mynt. Take care.